Hey, what is up, dudes and dudettes? This is Dudediligence here, and feeling better now. If you see my update video, this one will just be some more in-depth, not really analysis at this point. I'm just gonna throw some price target out and tell you guys, here are some of the positions that we will be holding for the next month, and what I think is really great. And again, we're not financial advisors. We do not give financial advices. Therefore, everything we see on the channel is for shit and giggles. Okay. So our star stock right now is PBT actually, and we credit it to our boy Broncho 20. Is it 24? I think it's 24, isn't it? You guys should go follow him on Twitter, and then if you want to chat with him, get on our Discord, and we have a lot of daily discussion on PBT. He did a lot of DD on this stock, so I can take credit for it. But I will give you, in the next few days, I will basically post a video reviewing his DD and why it is so brilliant and why we love him. And also, guys, no homo, I secretly have a crush on him because he has such a deep voice, you know what I mean? You know, like, I know girls like deep voice, but also like when you're a guy and you can sing tenor, you kind of want to have a deep voice. Like, we all want something we don't have, right? So Bronco is actually really bullish on this. I think our internal Discord price targets is somewhere around like $18 to $20. Just in terms of how I think about this stock, and right now oil is around 91 to 92 a barrel. Our target is oil is around $100 per barrel, and I might even see a 120, right? And you guys all know that I actively short the market, so I'm like bleeding on interest rate, and I'm bleeding on a lot of option contracts, especially I got washed off last week. But all my oil contracts are doing really, really good. On what you guys should know is if you are buying to PBT, what you're really looking for is a price target from $13, go over the previous high, which we're really comfortable and we're really confident that it will. And usually on a day where it hits this, on my Patreon internal price targets, it's somewhere around $15.30, I think, or $15, whatever I give it to them. And then I will make a more detailed video on that. And we do believe that it's gonna go over this amount, and then which is $14.69, and then have a higher high here. Okay. Another thing we're on is it's just the oil basket. If you really think oil is going high, it's probably a good idea to basically long USO. We basically trade this option all the way starting over here, start buying, like, you know, calls and calls and calls and calls and calls. While, you know, sometimes we bleed a lot of money when sudden volatile movement going on NASDAQ and we're buying puts. So this one really gives you a really good idea of this almost mimic what happens in 08. Like, you know, before the market huge crash, there's like an oil quote unquote crisis. There's never gonna be an oil crisis per se, but whenever oil crisis happens, there's always gonna be an upward momentum like this. And if you look closely to where the chart is leading, essentially what really is gonna happen overall is once oil goes peak, when oil gets peak, that's where the market is going to generally go on a downtrend. And our estimate for the market is we do think this year we're going to have a red year overall, but we're going to have a lot of volatile movement, so that we'll see a lot of dispersion. And again, you know, if you trade commodities, you will know that if it's, you know, going up 15 days, it's probably for you to wait until, again, like Monday, there might be some slight adjustment because the Asian market is going to open, and a lot of people like to short oil. Consider the Asian market is not really in the EV transition yet, therefore they're probably going to short it down a little bit. And then we probably will buy some back, or, you know, when volatility is really high on the opposite side, probably it's going to great to sell some puts. When volatility is really high on the top side, it's probably really good to sell some calls and make some like quick gains, you know what I mean? You guys probably know what I mean. And if you go look at Gush, pretty sure Gush is 3x. So if you look at Gush, you will see that there's actually a $8 or $7 disparity, which is almost accounting for 7% on ups and downs for one day. If we take our calculator, let's just say 124. 5% disparity on a leverage. I'm not really sure how much it's leveraged. I think it's 3x. Let's just assume it's 2x, right? So let's assume it's 2x. So technically speaking, oil increased by about 3% on the day. But in reality, it actually increased about 6% in the entire day. That means you have a dispersion of 3% on just one day. That means we're pushing off to the very higher limit where people are like getting a little bit nervous. It's like, okay, is it gonna really, gonna pop? If it's gonna pop, it's gonna be one day and it's just a spike. And then afterwards, people dumping a bunch of contracts and start buying puts or start buying like, short contracts on oil, like 3x on, leveraging all of their upside insurances, and then by like 1 or 2 months later on, you will see a drastic spike up and drastic spike down, but it's not there yet. We're still at the build-up stage here. So it'll be really great to do some oil trades. And again, we're big on natural gas, so that's one of the things we actually took a lot of profit over the past three days, and we actually start buying a little bit puts, but our timing is a little bit off, even though today it hits our price target. But because option expiration hits, it's actually really bad for us. But anyways, if you guys want some tips or want a video where I lay out what are some mistakes I made over the past few weeks, like for example shorting the Nasdaq or just generally shorting a lot of unliquid stocks. And at first it made money, but later on when it reaches certain a stop loss rate, people will just come in and swoop it and it will just go up. And then after it go up to a certain indicator, and we all know where it's gonna go, right? Because we have probability distribution, we have MAs, EMAs, and a lot of technical charts to help us determine where the price is gonna go. The difficulty of trading options is actually trying to figure out the best expiration date to sort of utilize your capital, at the same time not completely maximize utilization, if that makes sense, because you always want sort of like a safety margin on the side in case you're wrong. Then it's really great to do like a very sudden hedge in case market do a volatile movement towards the opposite direction of what you're trying to go for. But again, and another stock we are gonna be talking about is Shell. And there's British Shell have a huge disparity in terms of whether the ADR in America is traded higher than the ADR than anywhere else. That just means there's a huge demand of this. And one of the reasons there is a huge demand is because we see British Shell, technically speaking, like if you go look at British Shell's, where's the buyback statement? Where is the buyback statement? Did I not do the buyback statement on here? Okay, so I didn't put a buyback statement on here. So basically what you need to know is British Shell actually issued a statement saying that they're repurchasing their stocks, and they did it around December 2nd, and about 2 days ago they said they're increasing the amount to $8 billion. That means we will see a $2 to $3 price increase on British Shell if the oils keep going up. You might see a $6 increase in British Shell, and you might even see a 15% drastic increase if we don't, if the oil price actually, keep going like where it should be going, like this. And again, this gap down might be a little bit temporary. There might be some pullback because when you trade options or when you trade futures, especially commodity futures, you all know that in the middle of the month there's gonna be like a volatility, sort of like a transition, and you can't really have a commodity traded like suddenly go up by like 25%, or stuff like oil. Like if you go up by 5%, a lot of people basically blow their account when they're actively shorting or when they're doing something to use oil as a hedging instrument. So whenever this huge upward movement happens, there's always going to be a correction, which we anticipate next week. And when the correction comes, we probably will buy a long out of the money and sort of like a higher expiration date option to sort of fortuitously, I don't know what word to use, but speculate that if oil reaches $100 around by the end of like March, say, or before March hits, then we probably are just gonna see a huge profit on that part. And this is it for this video. If you guys want a detailed trading plan, we might probably post it on Patreon, and then we probably will post that video not really on YouTube, but make it unlisted or make it private, and whoever on Patreon, everybody on Patreon will have access to it. And later on I'm gonna make a video on GME. We're gonna post a GME sort of like a a teaser video on the trading plan, and we will post the same trading plan on Patreon too. If you guys are interested, you can join the Patreon. It's only $10 per month. You know, it's totally worth it because everybody says it's worth it. Especially during like very high volume trading days and during the day where, you know, I trade a lot, and sometimes like it's just like sometimes when you have questions, it's really nice to have someone be there to answer your questions when you're really confused. Especially like, for example, like a couple of days ago there's the Amazon confusion. It's just earning estimate overreaction again, you know. And for GME, we're probably gonna post and again, our stance a little bit bearish, so if you don't really want to hear the bearish side of GME, probably it's not it's a horrible idea for you to join and hear us talking about, you know, the downside of it and how we're gonna utilize that by having some shares and then basically leverage it. So then when it's, you know, having a big downturn, or if it goes to the second price level that we think will go, you will probably benefit off of the leverage implied in the options. Or you can just, you know, some of you really like gamble plays, this will be one of those gamble plays that you will place, and it will probably yield you about 500% return if it actually happens. The hard part is just really trying to figure out the time frame here. It's probably better to just trade Iron Condor or trade some Butterfly, because, you know, some retail still have some glimpse of hope of GME and maybe AMC. And I may even make an AMC trading sort of like a plan. But again, like, you know, about 3 or 4 months ago, we already said AMC is going to come down to about $15 to $12 range, and it really just happened. The reason why we didn't buy puts is because we simply don't have enough money to really buy puts when we can maximize our profit over here. And then when AMC is somewhere around $50, the economic situation isn't like really cleared up there, so it's not really worth it to commit thousands of dollars to buy puts for this amount of time. In this case, if you're buying options for AMC, you're literally just buying time value here, and again, you will probably commit about 2K, and then you probably already made like twice that amount. But anyways, those are like just high level big brain plays that you can place, especially when you're playing with time. Anyways, this is it for the video. Hope you guys love this, and see you guys on the upside. If you like those kind of videos, smash the like button and subscribe.